I want to talk about where our markets go next. Somebody asked me in my Discord group yesterday, in the near term, what's going to happen with the markets. And so I wanted to explain that here for everybody to be able to see. But if you do want to join us in our private group and get access to the Discord weekly calls that we have every single Saturday, you do so by going to my website. You sign up through Patreon to get access to Discord, and then you can join me every single Saturday, have an opportunity to speak with our community and ask me questions directly every single week. We'd love to have you, but I wanted to expand on my reasoning and where we're at in these markets in today's video to get started. Let's rock and roll. So we are watching, this is the first time since the 1970s that the Federal Reserve hasn't lowered interest rates at the first sign of rising unemployment. The 10% unemployment of 2008 will look like a cakewalk when this 14-year economic cycle ends, from Finance Law. Now, I've been saying that we're already in a jobs recession. It started at the end of 2023. And I've been saying that we're already in an earnings recession. They are manipulating and propping up the GDP. It's being funded through a lot of government spending and deficit spending. That's going to backfire on us. It's not a real economy. The real economy, which is Main Street, and the best economic data that you can get is you go walk the streets of the downtown, the town or the city that you live in. Go walk the streets of the downtown. Go look at the restaurants. Go look at the bars. Go look at the shopping. Go look at the malls that are all empty, and go speak to a small business owner yourself, and you're going to get a little bit different perspective than what they're telling you on the mainstream news. Now, this is what I want everybody to understand. We're watching, it's already, the squeeze is on of our Main Street economy. And when the interest rate cuts do come in September, right? Everybody's got the consensus that the rate cuts are coming. We're going to run with that. But I want to show you what happens when the rate cuts do come and whether or not that actually brings relief. So I thought this was an interesting perspective, and I think that this is pretty spot on, actually. It's not going to play out exactly the same, but there's a lot of similarities. Henrik Ziberg. Replace 2007 with 2024 and 2008 with 2025, and you will get the picture. Only this time, the Fed cutting cycle will be faster. And I want to show you how this happened. Now, this all began in September of 2007. September 18th, the first rate cut in 4 years of 50 basis points. Now, their starting point where the Fed rate was at was 5.25 to 5.5, which is exactly where we are at right now. Now, they started with a 50 basis point. We are going to see here in this September meeting whether or not they do 25 basis or 50 basis. That is the debate, but the consensus is that we're definitely going to get the rate cuts here in September, which, funny enough, this September meeting is on, I think, the 17th and the 18th, or the 18th and the 19th. So, the similarities are right there. But what we saw is that in October, we saw another 25 basis point. In December, we saw another 25 basis point. In January 22nd, 2008, we saw an emergency rate cut of 75 basis points. 8 days later, they followed up with another 50 basis points. I mean, the rate at which they cut was so drastic and so fast, right? The only time that compares is in 2020 when they took the rates back down to zero, basically instantaneously. March of 2008, they cut by another 75 basis points. And then in April, they cut by another 25 basis points. They waited and then finally cut again in October. As the crisis deepened following the collapse of Lehman Brothers in September, the Fed made another emergency rate cut of 50 basis points, bringing the rates to 1.5%. Then in October, later that month, at the end of the month, they did another 50 basis points. And then the final one came in December of 2008, with the Fed cutting the rate to 0 to 0.25, effectively bringing the federal funds rate down to near zero in response to the severe economic downturn. In total, there were 10 rate cuts between September 2007 and 2008, reflecting the Fed's increasingly aggressive efforts to address the growing financial crisis. Now, similarly, I wanted to show you this chart right here, which is the Global Liquidity Index. What we saw was global liquidity started to grow in 2006 and then eventually topped out in the end of 2008, 2009, and then that's when it rolled back over. And that coincides with what happened in the markets as well. Now, this is what I wanted to show you, is that the market was having a good time. It was having a run, had a little bit of a concern leading up there in August, a little bit of a down month. And then the Fed made the decision on September 17th. We're looking at the weekly chart right here. Now, when the Fed did that first rate cut, the market actually rallied for the next 2-3 weeks. Went and set a new all-time high for the S&P 500. Really suckered a lot of people in, you know. And then we did a 57% bloodbath until March of 2009. And that's how long it took for this to play out. Now, this was the stock market bottoming out in March of 2009. But if you recall, the real estate market bled all the way out through 2009 into 2010 and 2011. Some markets even further. So what happens next? As I said yesterday in my Discord weekly call, I said that I think there's a great potential for these stocks, all of the major indexes, to go do a double top formation and go set a new all-time high. They're not far off. They're only 1.5%, 2% off from their all-time high. So we could see a rally into the Fed meeting next month in September, where the Dow Jones, the NASDAQ 100, and the S&P 500 all go set a new all-time high before that Fed cut comes in. And then maybe we'll see a couple weeks of good activity into October. But we will see a correction before this election. That is my prediction. I'm sticking to it. And just like we've seen all the way back to the 70s, historically speaking, when the Fed cuts, it's because things are bad. And the market then realizes how bad things are, and that's when we get a major sell-off. This time around, is it going to be a 20%, 30%, 57% bloodbath like we saw in 2008? We'll see. That's yet to be determined. But this is why I'm so excited. Folks get it confused. They think that I'm this big bear and I'm going to be a perma bear. Folks are asking me, are you going to be this bearish this whole bull run? Well, it depends what asset we're talking about. If we're talking about gold, which continues to set new all-time highs, I'm very bullish. If we're talking about silver, which has made a move and has great fundamentals, I'm very bullish. If we're talking about XRP, which is the best digital asset ever created, a world reserve digital currency with great fundamentals and great adoption from institutions, I'm incredibly bullish. If we're talking about my community, my businesses, the businesses that my community's starting, I'm very bullish. And there's two sides to each coin. We're sitting here on the edge of this thing and we're watching how bad this is going to be for those who aren't prepared, while on the flip side, knowing how this is our opportunity. We are going to go, we're going to take everything we ever wanted. It's going to be given to us. These are businesses that are going to be given to us. Investment opportunities that are going to be given to us on a gold platter. And I'm talking about these assets when they go on sale during this correction before the election, before the pump continues and inflation comes back, the dust settles from this election, and that liquidity cycle continues. It's going to take us to new all-time highs for all these assets. And I hope that you're going to be here for this ride. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.